Hi everybody, welcome back to another REIT analysis video. So in this video, I'll be going through the Q1 of Keppel Pacific Oak results. If you like my video, please help to support by hitting the like, subscribe and comment on any analysis that you would like me to work on. Before we get into the earnings, in my opinion, the current overseas REITs valuation are quite attractive, from US to Europe and to India. Although there are a lot of bad news, some REITs are actually doing fine, and Keppel Pacific Oak is actually one of the better ones. Their property valuations was not really badly hit with a mixture of ups and downs in terms of valuation, and I will also share in the minutes that they have mentioned about why their assets are actually performing better than the other US REITs. So let us jump straight to their results. As you can see, for their revenue and NPI, although year over year it looks like there's a drop. Actually, if you compare quarter over quarter from Q4, there was actually a slight improvement where the revenue increased from 36.6 million to 37.1 million, while the net profit income, which is the NPI, increased from 19.9 million to 21.2 million. But as you can see, the distributable income available to distribute to shareholders still decreased to 13.1 million from 14.5 million. So what is the reason? So partially, one of the reason was due to the divestment of the smaller offices, and secondly, which is the bigger effect, was due to the higher financing costs. So because of higher interest rate, therefore all the REITs are actually being impacted in terms of giving out distribution, therefore having a drop in DPU. Therefore, if the Federal Reserve in the US actually stops increasing the interest rate, Keppel Pacific Oak will definitely benefit together with the other US REITs. But as you can see, for their leverage, the good thing is that they only have refinancing only required to be at the Q4 of 24. However, the unhedged amount would still be hitting their distributable income. But on the bright side, I feel that because of their better performance is actually a very good hindsight, because other REITs are actually having a drop in the revenue and NPI, while Keppel Pacific Oak still managed to have slight improvement quarter over quarter. So if we look at their debts profile, about 74.82 million would have to be renewed by the Q4 of 2024. Good thing is that they have actually planned about it with additional 50 million of revolving credit facilities that will be able to use to cover this amount of debts in time. Moreover, their leverage ratio is at 38.7%, which is safe compared to other REITs, US REITs, which is at the high level of 40+%. One of the example is Manulife, which is currently still at a very high level of 49%. This is a kind of level that you would not want your REIT to be at. So for Keppel Pacific Oak REIT at 38.7%, is a very decent value because they have a safety gap of 11.3% to play around with. If you see their cost of debts, they actually have a huge jump from 3.02% of last quarter to 3.8% per annual. Whereas from the average all-in average, it jumps from 3.2% to 3.96%. Similar to all REITs, because of the huge jump in the cost of debts, this has caused the amount of distribution to shareholders to drop. One analogy is by thinking about having a housing loan from your own perspective. When your salary comes in, if the interest rate of your debt is higher, this means that more money has to be allocated to pay down the debts. Therefore, this will result in lesser savings. So this is the same analogy for REITs as well. When the interest rate increases, they have to allocate more of the income to pay down the debts or the interest of the debts. So therefore, this would result in lower distribution to shareholders. So for occupancy rise, if you see, almost every buildings have dropped in occupancy. However, the bright side is that if we see the bigger assets, which are especially the ones in Seattle, there's only a slight drop from 92.3% to 90.3%, 96.8% to 95.1%, and 97.9% to 97.2%. Only the bigger drops in these areas are from assets which are much smaller, and there's also slight rises in other properties as well. Therefore, because of all this, they have caused the overall occupancy to drop from 92.6% to 91.9%. This is still very decent, at a very decent level, and I feel that in the upcoming long run, as companies would call employees back to work, this would cause the occupancy to improve. However, one bad thing that I would say about the recent results is that their negative rental reversions was very high at negative 6.5% for Q1 of 23. Remember I mentioned about Cromwell's offices doing much better at a positive rental reversion. So this shows a difference in the performance sometimes between US offices and European offices. And Singapore offices are another kind of performance as well. So therefore different continents have different performance. So why is it killed to such a huge level? It was because of the renewal of one of the big tenants or bigger tenants in Miet's land, which is the 6th bigger property for Keppel Pacific. So because of this, it has caused a huge drop. And they have mentioned that without this lease, it was actually at a positive level for 4.9%. So when investing in REITs, it's very important to look at their distribution, and it's even more important to calculate out what is the estimated yield that you can get from the upcoming quarters. So if we look at the dividend for Keppel Pacific Oak, we can actually roughly do some simple calculation to estimate. So let me show you how I derive it. For the second half of 22, the distribution income was at 29 million, which came in at a declared cents of 27.8 cents. So for this quarter, the first half was at a distributable income of 13 million. Since the Fed did some slight increase in the rate, I would assume that the next quarter might come in at 12 million, assuming that the properties are still doing decently well. So with some simple calculation, it will come in at roughly 2.4 cents. This will equate to about 15.7% yield at the share price of 30 cents. However, I need to emphasize that if it continues to drop, the yield would definitely be lower for the upcoming quarters. Let's say if the first half of 23 sums up to be 24 million, the distributable income might come in at 2.3 cents. And for the next half of the year 23, as it continues to drop, let's give it a worst case scenario, at 20 million of distributable income, they will declare a dividend of 1.92 cents. But at this amount, it would still give a high yield of 12.6%. So when it comes to investing, especially in REITs, when there are a lot of negative sentiments, the prices will drop to a very attractive level that they will give a very high yield. And investors who are very confident or are fundamentally sound with the REITs, they will be highly rewarded with high yields. In my opinion, at the current share levels, is at a very attractive yield considering that Keppel Pacific Oak REIT is performing much better than other US REITs such as Manulife and Prime US REIT. From the meeting minutes, we can also see there are various reasons why the management have mentioned that they are actually performing better. One of the most important reasons why Keppel Pacific Oak is performing better is because most of their properties are in the suburban cities rather than in the gateway cities. So what is the difference is gateway cities are in developed places or states such as New York or Boston, whereas for suburban cities are the cities that are currently developing or not as popular, such as Salt Lake City. So because of this, as more companies are moving to suburban cities, this will benefit Keppel Pacific Oak. They have also mentioned about how the physical occupancy rates in the cities that their assets are in are actually higher than usual rates. Moreover, although tenants might negotiate for lower rents, some actually requested for larger space. So because of this, it helps to strike a balance between charging a tenant cheaper but renting them more space. So this will help to balance the income. In this environment where offices are not much in demand, it's important for Keppel Pacific Oak to strike a balance between these 2 points so that they can be able to maintain the distributable income. I hope you liked the video, and please support by hitting the like, subscribe, and comment on what are your feedbacks or what do you feel with regards to the performance of Keppel Pacific Oak REIT. You can watch my other analysis video as well if you have enjoyed it, and do comment below as well if you are a Keppel Pacific Oak shareholder. Thank you so much for watching. I'll see you in the next video.